Hi, welcome to this video, which is all about best forex trading strategies for consistent profits, and it's a popular search online. Obviously, all traders want a smooth equity curve with drawdowns being kept obviously to a minimum and not lasting too long. Now, in terms of the best forex trading strategies to do this, I'm going to be going through them in a moment. What I would consider to be a typical drawdown for professional traders, and that will vary in terms of the strategies that they use. Now, in terms of consistent profits, there is a lot of information on this online, and you see a lot of people say you can make a regular weekly or monthly income, so hardly any drawdown at all, and not lasting for very long. That is pure fantasy. It isn't reality. You'll see a lot of people who promote day trading strategies or scalping strategies saying this. But the fact is, if you try it, you just basically lose money. Okay, those strategies don't work today, and the proof is in the figures. If you look at professional traders, the top performing fund managers in the world, there are no day traders left. Yeah, before the internet it worked, but now markets are just simply too noisy. So if you're a beginner, avoid day trading and scalping. Now, in terms of forex trading strategies that work, they're really going to be medium term or long term. Medium term, I would classify as, let's say, traders who trade volatility, spikes, traders who swing trade, and it's really going to depend on how the trader applies their strategy and how good it is. But just to give you some rules of thumb, there's no traders who swing trade that I know, or trade in a medium term time frame, who at some point don't have a drawdown period of around 3 months. Okay, that's just fairly typical. And a lot of traders don't want to hear that, but it's true. Professional traders have to cope with that, and so will you. You've got to look very long term, judge your performance over a year, okay? Not over a month or 3 months. Now, in terms of typical size of drawdown, I personally think if you're taking a maximum of 5% risk on your trading account, that's if everything goes wrong, you'll probably at some point experience a drawdown of around 10-20%. And in these periods, obviously, what you do will just basically determine how big the drawdown becomes, or if you come off the drawdown. My own recommendation is you cut size when you're in a period of drawdown. Okay, don't try and come out of a drawdown too quickly. You just end up digging yourself a bigger hole. You come back from drawdowns slowly. You could get lucky. A lot of traders go and actually increase their position size to get the money back quickly when they're in drawdown. But you could be lucky, but chances are you won't be. So on a swing trading strategy, 10-20%, that's pretty typical. 3 months, you're going to face a period of 3 months at some point. So don't be discouraged. Okay, focus longer term. Now, in terms of possibly longer drawdown periods and bigger drawdown periods, if you're a long-term trend follower, and by long-term trend following, I mean from a few weeks to a few months, because of course, if you're tracking longer-term trends, then you are bound to have a bigger drawdown because you've got to risk more to your stop. Okay. In terms of a bigger drawdown, what I would recommend, obviously, for forex trend followers is basically keep the trade size very small. Smaller than if you're trading in a medium time frame. Now, in terms of trend followers, they tend to make most of their money in a few months each year. And this is something that perhaps it would be a good idea if you're new to forex trading, go and read about the turtle trading strategy, which was conducted by Richard Dennis, turtle trading experiment. What he did was he gave a group of people who never traded before trading accounts and a simple strategy. They made him hundreds of millions of dollars. But all the turtles had to face long periods of drawdown, sometimes 7 months or more. They made big profits. They made them in just a fraction of the months of the year, like 2 or 3. I think if you're a long-term trend follower, your flat periods and your periods of drawdown are going to last half the year at least. You probably make most of your profits, like the turtles did, in 2 or 3 months. Now, in terms of what I'm saying here, it is obviously very general. But I think the point of this video is just for beginners to emphasize you don't come in and just have a smooth equity curve, okay? You also don't come in with the attitude that you're not going to get 3 months of drawdown at some point. Every professional trader in the world has experienced that. You're not going to experience it all the time, but you are going to get a long period of drawdown. It's very important that you're disciplined, you stick to your strategy, you don't try and get the drawdown back too quickly, and you cut your position size. Now, in terms of consistent profitability, my final point would be measure whatever Forex trading strategy you use over 1 year or more, not over a period of weeks or months. Right, that is the video for today. Thanks very much for watching me. Take care. Have a good day.